Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, so I am excited for another episode of the weekly podcast that I do. I just interview different allocators, different fund managers. So just really excited about the guests that I have today. I've got Mackendy A. He runs. He's part of the leaders at AppGear Capital. AppGear is a private single family office, and they pride themselves on a meticulous approach to mortgage investments. So really excited to kind of learn more about your strategy, learn more about the ecosystem in Canada as well. I think there's just kind of so much connectivity. There's so much investor, collaboration. And, even with our fund accelerator, we have a handful of allocators from Canada that are interested in sharing what they're doing. And they're also interested in kind of sharing what's happening in the Northeast. So I think there's just so much to unpack, and, really grateful to have you come in and just educate us on all the things that you're doing. So welcome to the show, Mackendy.
Thank you, Joel. Again, thank you for inviting me and inviting AppGear Capital. We've connected before this call, and obviously I was quite impressed with what you have going on with the accelerator, the teaching, the mentoring. Again, it's very, very humbling to talk to you because I know you're quite busy, and it's really impressive to kind of like what you're having running right now.
Thank you so much. Appreciate the kind words. Very nice of you to say that. But look, I want to highlight you today. I want to learn more about you and your career. And I think I want to hear the beginning. Tell us a little more about kind of where you went to school. What did you study? How did you end up getting into the investment space? Because we all have our own story. And then maybe we just kind of unpack it with different insights on both of our ends on just kind of
Well, it's I was very fortunate. Being in Canada, I was a student athlete. Went to University of Montreal, did undergrad there in political science and econ. Throughout my journey, I wanted to go to law school, and I tried that, and I consider myself a failed attempt lawyer, and I enjoy the process of understanding the dynamic between businesses and law. However, practicing it was something that wasn't really too appealing to me. And throughout my journey, I had great mentors. A dear mentor of mine kind of like introduced me to the world of merger and acquisition, and that's really how I got my start into finance. A lot of the kind of legwork on deal sourcing, providing a mandate from family offices, it really kind of opening me the door to a new world that I wasn't privy to until started doing merger and acquisition, strategic merger and acquisition in that sense. It really was my school. Really, I really consider that my real education about business, real education about relationship, and also real education in terms of growth and business success. And I took that foundation and I kind of like never looked back.
That's exciting. And then, what was kind of next after that? I guess what was the next career?
And then through that, again, the family office world kind of opened up to me. Really got curious about understanding the family visions and understanding what made different families invest into different sectors. At the time, I was going quite often to Los Angeles, so I saw the whole Silicon Beach area being built, and family offices were actually really excited about that to kind of invest into the tech sector. And at the time, it wasn't kind of like interesting area for family office because they're more conservative in the long term. However, with the success of in Canada, for example, Shopify and other great technology that went IPO, that kind of brought us to a kind of inflection point where family offices were quite interested. And being in that world, that's where I kind of took that, being the bridge between certain investments to certain families and also presenting them with deal opportunities. Again, that really taught me a great lesson on
Hmm.
how they do their own due diligence, and what family offices are looking in terms of value. What is a real value proposition for a family who have a long-term time horizon? So those are key things where over the years I've understand and really kind of like hone my skill set around that,
Yeah.
and and then did that for a while. And when I moved back to Canada, went back to the capital market, understanding a little bit about, again, at the time COVID happened, so it was a
Hmm.
real education in the whole financial service space, just to know how which business was actually healthy. And so a
Yeah.
lot of these businesses kind of like were either trending in debt or had different leverage that they weren't talking about. Everybody kind of got exposed. And that's kind of like where I went to back to VC, for example. And then that
Sure.
was a great experience as well.
Yeah, I mean, what's interesting is, I've I heard this yesterday. There's people that work in real estate that want to, get into venture, and then there's venture family offices that, try to think about real estate to, you know, to build their wealth, right? So it's kind of the barbell strategy where you think about, long-term tax benefits and also, physical types of assets that you can invest in, but then also hopefully, getting some outsized returns at the same time. So it's kind of the barbell approach. And, that also kind of ties, I would say, in terms of the family's background. So some families come from a certain business background. So it could be, manufacturing, it could be logistics. And then there's another business, there could be another family that I met from a few years ago that was just in the insurance space, and they
Yeah,
built their wealth in the insurance space. So they might be investing in insurance tech because it kind of complements their expertise. So that's kind of what I've seen in terms of like different business families, just kind of investing and kind of buying, a lot of them are doing buyouts. So they buy out a company to kind of complement
yeah,
and realize the revenue of those businesses to kind of now show a
yeah,
larger amount of revenue for their entire holdings. So those are kind of like two flavors that I've seen. But what are some other flavors that you've seen with the other families that you guys collaborate with in terms of like what they're looking for and maybe what their goals are?
yeah. I mean, you have some great points. The first one, let's talk about real estate. Real estate is such a interesting asset class because most families are exposed to that, right? At a
Hmm.
different level, either all they do or others are just kind of diversifying their portfolio and they
Yeah.
have a significant real estate portfolio
Hmm.
that they're managing. I could talk about a bit about our family where real estate always been a prominent sector into the
Hmm.
family. Uh,
Sure.
Even though the family got their success into a legacy manufacturing, but they always own the building, for example. They always
Hmm.
build the manufacturing building. Our current location where I'm having this conversation was built by the family on the premise where it's going to be like a portfolio. It's like a portfolio play for us.
Hmm. Yeah.
So that's a long-term play. So that's a sector that's always been family. And the other question you said, what other families office that we work with look for? I would say every single family office have a different vision about returns,
Yeah.
um, and that vision is really about either where they are in the family legacy cycle, either first, second, or third generation, or fourth generation. From that, that's going to differentiate where they are in terms of the spectrum of value prop for any co-investment or even collaboration, for example.
Hmm.
For us, I think the biggest thing I would say here at AppGear, we're in the second generation. So we're quite active, dynamic. We're really, flexible. We are open to collaboration. In the same time, we're open to learn from other colleagues of us. So I would say we're in a bit interesting position because we're quite nimble. In the same time, we're
Hmm.
open to learn from the third and fourth generation family offices what they do well, and what they do great that we can implement. And at the same time, we're quite innovative here, so they're learning from us as well. So I think that would be a great kind of exchange. That's a good benchmark. And the second thing would say, really, every family office is very smart. They
Mhm.
understand business quite well. So for them, it's to bring something that you mentioned it. They have expertise in it. They understand it. It won't take them too much time to do the diligence. And then from there, can they kind of like integrate that with their current operation or portfolio? I think if those four things are clear and you could kind of like demonstrate that quite easily in the presentation, we've always seen positive feedback from that sense.
Mhm.
And
Well,
and we and we take
no,
this
go
in a
ahead. Yeah, no, totally. I was just gonna, when you were talking about the second generation, I think that was one more thing to point out. The sometimes the next generation may not want to be in manufacturing. They want to get into tech, or they may want to, modernize the business
yeah.
and do something that is going to still maintain the legacy of the family's goals and the family's reputation, but then they want to build their own, type of platform, right? They want to kind of do their own thing. If you kind of look at like Builder's Vision, right, which is the Walton family, Lucas Walton is kind of focusing on a lot of impact and climate change. So I think that was really interesting. And that's kind of a new spin that still provides a positive impact, but still is maintaining the legacy of the family. So have you seen those same kind of nuances with some of the families where the next gens are coming in and they want to kind of build something that is going to provide some impact, or have a new channel to generate some type of returns for the family? And if
Yeah.
so, like, what are some of the sectors? Is it venture? I mean, there's still a lot of modernized opportunities in real estate that could be innovative. I think like small homes are like a huge thing now,
Yeah.
like the tiny
Yeah.
homes, and getting access to opportunities in manufactured homes, 3D printing of homes.
Yeah.
So we a lot of the older generations probably weren't thinking about robots for 3D printing. So those are some ideas I have, but I'm sure you see a lot more than I do.
Yeah, I mean, you're right. Every single generation kind of want to distinguish themselves
Hmm.
from the first generation, and I would say even us, we're going through that. The second generation is really quite active into construction, for example, development,
Hmm.
and also real estate is actually a big part of what the second generation is doing,
Sure.
despite having the legacy business doing quite well, and we have all their businesses that's doing quite well. But
Hmm.
it's about passion, right? Everybody find their
Yeah.
passion, and they kind of like focus on that. Technology is a big play. I could say for us, as a family office, we had quite success in a couple growth stocks, growth technology that we initially invested. One of them, it's called, I think I forgot the founder name, but it's really a technology that's help with logistics, and we kind of were early into positioning ourselves into the cap table, and the company grew to 100 million, and kind of was a success story for us. So we have experience in the tech space. Um, I think growth is where most family office usually operate, unless they are fully backing the development and build stage into the early stage. But really, growth is where most family kind of play. But I would say most second and third generations who want to distinguish themselves, it's all about passion. They need to
Hmm.
find something that they could get up for and be driven for, and then from there they're trying to bring value. The good thing is they already have an infrastructure in place to kind of facilitate that. So it's really about how can you leverage the current infrastructure, which is, even though it's legacy, and the new idea or sector you want to operate in, how can you merge those two to make your life easier or to
Hmm.
speed up the learning curve? And I think here we're doing it quite well because the second generation is quite active in the business, so
Hmm.
they understand really the pitfalls on building a business and also the pitfall on growing a business. At the same time, taking that knowledge and building on top of that to build their current portfolio of construction, for example, or real estate, for example. They're using that previous knowledge and just build on top of it. So I think that's the best way,
Mhm.
kind of like create value in a long term, where and
Sure.
also there's no friction between the first and the second, but it's
Mhm.
always, I would say the first is the benchmark, the second kind of build on top of that.
Yeah, I'd love to kind of double click a little more on the market specifically in Toronto, and then maybe you can share a little more of the
Yeah.
opportunities on the West Coast as well in Vancouver, and kind of tell us a little more about the dynamic. I mean, from my understanding, we talked about this too. I mean, I feel
Yeah.
like Toronto is kind of the tech hub. There's a lot of wealth created there from tech, and then there's also real estate development. I feel like there's a lot of oil and gas on the West Coast. There are a couple big venture funds on the West
Yeah.
Coast on Vancouver as well. But like, because you're there, right? So you're going
Yeah.
to have the very direct, insights in terms of like the ecosystem. And then what are some of the opportunities that you guys are really excited about,
Yeah. I
maybe
mean,
as a follow on?
I'll just tell you kind of like the idea. We're really, really excited about Toronto market, which is
Hmm.
Toronto always been the kind of like the lifeblood of Canada. All the financials is done in Toronto.
Hmm.
Yeah, you said it. You said something quite interesting. The last 5 years, tech being one of the biggest job creators in Toronto.
Yeah.
That kind of brought the population growth, because we have not only great institutions, but we have a great infrastructure, great lifestyle. Great, it's quite similar to New York. So people kind of like understand there's no drawback to come to Toronto.
Hmm.
So we're seeing a population growth based on those metrics, which is we have great institutions, great jobs, uh, and the market itself, it's quite interesting and quite stable because of that, and the jobs are well paid. So that's why when we see the genesis of AppGear Capital really came from the post-COVID world, we really see an inefficiency between what's going on in the market and what's the market demand really. And
Hmm.
we really saw that there's a dichotomy and a breakdown from the demand and also what's available. COVID really exposed that, even in Toronto and even in Canada.
Hmm.
So we kind of position ourselves to be in the market as a solution to bridge those gap between the tier one lending and the demand outpacing what the tier one can do. And in a high interest rate environment, we saw the high interest environment really pivoted where, I mean, credit is really tight overall, but the demand never stopped. The demand keep increasing, and this is
Hmm.
why you'll see those projections about Toronto. The numbers are quite high in terms of high housing and housing prices. It's because the demand haven't stopped since post-COVID, despite the high interest rate environment, despite the cost of capital got a bit more. We're just having this like inflection of boom between population, jobs, and people that just want to live in Toronto.
Hmm.
It's exciting for us because we really think private capital is going to play a pivotal role, and we're going to be a pillar in terms of solution, and we want to be one of those funds and families to kind of like participate into that environment. And the market in Toronto is quite robust, meaning we always average about 700 crane in terms of building new towers. We're
Hmm.
quite I mean, that's in North America. That's not in Toronto thing. It's just like we're well positioned globally in terms of crane building, in terms of towers, condos. So we always had great numbers there, and I think that's going to continue.
Hmm.
I think that we saw a slowdown the last 2 years just because of the high interest environment.
In
But
terms of like development, or also purchasing and investing as
I
well, or
would
just
say I
everything?
would I would say everything kind of slowed
Hmm.
down because of the high
Yeah.
interest environment. But those projects will get done. They will be finished. They're not
Hmm.
going away because the demand is still there.
Yeah.
So
And
it's
usually when
really
there's a high interest, it's some, I mean, in my opinion, from the investing I've been doing, there's better opportunities for the buyer, right? Because they can just buy at a higher interest rate. Sometimes you can negotiate a little bit on the price because the seller's trying to get rid of it. And then what you can do is you can refinance
absolutely.
later and just get better terms, right? So.
Absolutely, and we're seeing that too, right? Like we're
Mhm.
seeing people coming to our doors. Either they have great assets, and they just kind of want to participate in that environment where purchasing in a higher interest rate environment, eventually the refi down the line a couple of years from now, and it will be a great acquisition for it.
Yeah, because when the interest rate goes down, the prices are going to go up. So if you came in at a better price when people don't want to pay that interest, and then you refinance, then
Yeah,
there's a little
yeah.
bit of alpha there.
Yeah, absolutely. And I think
Mhm.
Toronto is well positioned. It's always been kind of like the leader in Canada.
Mhm.
The West Coast is an interesting market as well, right? The Vancouver, it's obviously it have its tech bubble as well. Great lifestyle. Vancouver is amazing. It's really been driven by a lot of it from just people buying at a high cost. Property. The
Mhm.
average property there's probably between 1.7
Yeah.
million, so it's quite high.
Mhm.
But we believe that those two. I mean, if anybody invests in Canada, those are
Mhm.
your pattern: Toronto, Vancouver, Montreal, and Alberta.
Yeah.
Those are like the easy conversation to have.
Mhm.
Just get into the market the right way and find some good deals. You'll be fine, right?
Yeah.
Those markets are really quite dense,
Mhm.
and you said it, like there's great jobs and there's job creation, and there's people that want to live there, and those markets are always going to be kind of the pillar in Canada. So
Yeah.
I foreseen in the next couple of years, Toronto, Vancouver, even us, we're as a fund, we are. It's in the roadmap to penetrate Alberta. It's in the
Mhm.
roadmap to Vancouver, just because of the natural fit, right? Like you have
Yeah.
to participate in these markets.
Yeah. No, that's totally true. And then on the venture side, have you seen some of these real estate families have a little more interest in kind of tech exposure as well? And then if so, where is kind of the optimal way for them to do that? Is it better for them to kind of build their own? This is kind of an interesting question. So is it better for them to build their own internal investment team to avoid the fees? Or is it just easier for them to just kind of invest in the funds, have the funds, trust the funds to kind of source and screen those
Yeah,
deals?
yeah,
And that's kind of a common question because it's just the way I look at it, it's like you can either invest in the S&P 500 or try to, pick and win and rebalance deals on your own. So I think
you
that's
know,
kind of,
it's funny that you said that. In 2016, I would say the climate at the time was every family office want to build their own investment team and kind of
yeah.
sort their own deal and kind of build their portfolio their own way with their own vision. And they quickly realized it was quite difficult to pick winners.
Hmm.
It's quite difficult to build the infrastructure that you need, the relationship that you need, that a
Yeah.
VC have, that a family office who's typically conservative doesn't have, and you have to kind of like expose yourself to that, right? So I saw a pivot there where from 2016 it was really keeping everything internal. We're not trying to outsource anything to, I would say, 2018, 2019, people kind of realized we don't have the bandwidth to build internal team like that. Let's find great funds
Hmm.
and great managers to participate with, and then kind
Yeah.
of piggyback on the alpha there.
Hmm.
I think that narrative is still true.
Yeah.
It's still true, and I would say now the first toughest thing for a family office is really
Hmm.
to be able to participate in the top tier funds, right? Like everybody wants the same ones, and
Yeah.
then wants to be in the prestigious ones.
Hmm.
It's hard. It's always harder for a first time manager to get family office capital because the family office have a natural tendency to just go to the winners and who've been performing the last
Yeah.
5 6 years. Same thing for Canada, I would say. We have some funds who have some great history, so it's easy for them to kind of like piggyback on those history than to fund a first time manager. But
Yeah.
uh, again, I would say those relationships have to start early, and making sure that your thesis and vision is quite easy to understand for a family office to understand. Hey, there might be some validity there, especially in the prop tech. I would say, family who have a real estate portfolio, prop tech is
Hmm.
a conversation to have, right? A family who's in security, it's an easy conversation to have about AI, for example.
Yeah.
So I would say stay on the sector that they know well, and then
Hmm.
adjacently find tech that could kind of bring that value.
Yeah, no, I totally agree, and I think you make a good point. So if you're building an investment firm and you're trying to hopefully, work with some family offices or have them come on an LP, I think trying to figure out the partnership framework where it's like, look, you know what, you come from a manufacturing family, you're interested in venture. Here's some insights that I've learned about,
Yeah.
prop tech. We invest in prop tech, we invest in manufacturing. If you don't invest in those sectors, like you could probably come up with some thesis that could give them access to that type of exposure that they normally wouldn't get access to. And with you being a smaller player, an emerging player, sometimes you can give them the better customer service that you're going to get
Yeah.
versus getting into,
Yeah.
A16Z or Sequoia. A lot of times, like, I know some larger families that get access to those larger tier one funds, and it's really through like a wealth manager. So they're not, a lot of times they may not be able to go to the AGM, right?
Yeah.
And
Yeah.
actually go to those, go to those other updates and touch points. They just kind of are, subscribing their capital through an RIA. Where I think if you can kind of get involved in a manager that's even on like fund 2, fund 3, now they're kind of building something from the ground up, almost like an entrepreneur. And some of those families definitely come from business minded,
Yeah.
origins, where I think the families also could lean in and maybe share some insights. Obviously, they don't have to be involved in the investment committee, but maybe there's some expertise or some strategic connections that the families could also make, right?
Yeah.
So if the family's kind of tied to, another family because they're part of the same community that does venture, maybe that family could also help, one of the portfolio companies of the fund get to their next funding round.
I
So I
agree.
think,
I agree. I agree with you. I think value, like, any family have to bring some sort of value. You just have to
Mhm.
figure out what's that look like. And I would say for any emerging manager who are looking for capital from a family office, figure out what's the real value proposition that family is bringing
Mhm.
to your fund. Yeah, like if it's a family that's in manufacturing and you're building a legacy business that's going to help old manufacturing, that's a great partnership. That's a great way to
Mhm.
kind of like pitch that to the family where this is what we're trying to do in the fund. We're trying to figure a way to kind of like facilitate certain part of the that sector.
Mhm.
And yeah, you have this manufacturing business. You probably know all the OEM and who you work with. Can you make some introduction? That is a great partnership, I would say.
Yeah.
We take the position here. We would not do anything that we don't understand, and we
Mhm.
would not do anything that we don't have expertise or knowledge of success. To be honest, we success is the biggest benchmark on moving forward.
Yeah.
Have we had
Um,
success in that sector before?
no, I totally agree. And then, one other thing I want to talk to you about is community building. So you guys just hosted, kind of this community event, this summit with
Yeah.
other allocators in Canada. So I always advise fund managers, and we do this with our platform too, definitely get people in person, have some type of intention when you're building some type of event. Like, what's the purpose of the event? Who are the people that are attending? What do they get out of it? So I think definitely when I try to do community building, I try to kind of think about all the people that are coming in and what's the point of them being there, and do they get anything out of it, or is it a waste of their time? So
Yeah.
what are some learnings that you've learned, kind of building community? And obviously you're in a unique advantage because you have those connections with allocators, and you're growing that community. But for fund managers that are looking to kind of go outside of the existing LP base that they have, how would you advise them to, number one, connect with people,
Yeah.
and kind of get people together and convince them to actually come to your event? Because there's so many other great events there, especially in Canada. There's so many large
Yeah.
institutional events. So, as an emerging manager, or even just a manager that's now getting into trying to do more, in-person community building, would love to hear any advice you have. And then
Yeah.
maybe some unique nuances with Canada.
Yeah, I think well, I would say let's start with the Canada perspective. I think here we have a lot of great organizations who kind of like bring all the alternative investment together,
Mhm.
or PEs together, or VCs together. I think that would be the first thing I would look into.
Yeah.
How can I drain one of these associations who are doing great work
Mhm.
and we're very fortunate in Canada. We have a couple good ones that
Yeah.
uh, I would say, even throughout my journey, a lot of the relationship building came from
Mhm.
those conferences where we didn't even necessarily talk about investment. We just talk about, hey, what are you working on today, or what's a project that you're taking on, and what sector that excites you, just to
Mhm.
give you kind of like an idea of like where they're working in the spectrum. And then
Yeah.
eventually down the line, if something comes up and you see that it fit well with his spectrum, you could reach out to that person and they know you already. They kind of have a face behind the name.
Yeah.
It's an easier conversation to have. I would say that's the best approach. It's always hard for first time managers to build those rapport because I feel there's like a selling point when you meet like a family office or you meet like a big institutional fund, you want to sell them. Really,
Yeah.
I think focus on the human component, like who's behind the family, who's
Mhm.
behind this fund, what's their background look like, what their passion, what sector they're excited
Mhm.
about, learn about that sector, and then bring value there. And then that's how you make the real connection. I would say organic connection is the best connection. Like
Yeah.
there's transactionals. I believe transactionals is such an easy way to forget somebody. When
Mhm.
when it's organic, that
Yeah.
person will you could have like 10, 15 years relationship with.
Sure. Yeah. So I'm reading the book, The 48 Laws of Power.
Yeah.
I think I read it a long time ago, or I think I read like a summary,
Yeah.
and I thought it'd be interesting just to read it. So I'm listening to the audiobook, and recently there's a chapter that says, like, if you ever want to ask somebody for a favor, just tell them why it would benefit them. And I
Mhm.
actually used that the other day, and I was like, hey, you know what? Do you think you can help me do this? But here's what it
Yeah.
here's why it's good for you. And I listed like four things, and that made them really happy because I made it kind of a win-win where it's like, look, you know what? If you could do this, that'd be great, but this is what you could get out of it too. So I think anytime if you're, you know, trying to build a relationship with a family office, you're trying to solve some problem, right? Anything that you're selling, you're giving them some type of solution. So like maybe the
Yeah.
problem is, hey, you know what, they keep getting boxed out of these, tier one funds. They just never get access. So maybe you're the unique person that is the super connector that can kind of give them access to that kind of market where
Yeah.
they normally don't, or if they do, they've got to have multiple lines of intermediaries to get in. So if you're kind of able to do that, so that was just one thing I learned. So I don't know if you have any other lessons in terms of just
I've,
relationship building as a whole.
I've always take the approach to be yourself. Like,
Yeah,
I've always learned like to learn about each fund value prop and talk about their value proposition when I meet them.
yeah,
If it's a deep tech fund or if it's a deep tech growth fund, understand their portfolio and their success, their win, talk about their win. Hey, so and so portfolio manager, great job on this last Series C raise. This company is
hmm,
actually great. Just kind of highlight their success for them to know that, for them to understand that you actually been following their portfolio and following their success, and you actually know where they are in the life cycle of the fund. I think it's really powerful too for someone to
hmm,
understand that you put time to understand their portfolio and the value proposition they bring to the market, to the ecosystem. So I would
yeah,
say I've always took that approach.
hmm,
There to talk about them and their success, and then from there they'll ask you, hey, what are you working on? Oh, by the
hmm,
way, there's this happening, and uh, yeah, and then they'll tell you, hey, if I could help, please reach out. I've always taken that approach. I really think for me, it's always been sort of like a long term relationship. It
yeah,
doesn't happen overnight, but just know that I'm here, and if you have any opportunities, I'm always open to listen. Even here at AppGear, where we most of our deals actually come from relationship that we've kind of cultivate over
hmm,
the last 2 years,
yeah,
and we kind of put a benchmark of what we're looking for, and so any broker or any professional who have access to these deals, they know like, okay, these guys, this is what they're looking for.
hmm,
and they're quite responsive. That's one thing we're proud of. We're really proud of AppGear. We want to be responsive of everybody that kind of do outreach to us, and it's been working. To be honest, it's really
Mhm.
we took the approach where anybody that kind of knock at our door, we're gonna respond. But we have a benchmark where bring us good deals and great value, and we'll take a real serious look. And I think that's the way most relationships start. It's by
Yeah.
that trust.
Sure. No, I totally agree. And we'd love to learn a little more about like, what you
Yeah.
guys are building, kind of like what the areas are that you think are really, really exciting.
Yeah.
That way kind of the community can kind of, be aware of those opportunities as well.
So it's quite simple. Our thesis
Mhm.
up here, we believe that residential mortgages is an underserved sector. Most people or most funds focus on commercial and big segment of
Mhm.
commercial,
Sure.
but we kind of created a thesis where post COVID we realized there's a real inefficiency in that space,
Hmm.
and we believe that that efficiency is just going to keep increase over the next couple of years.
Yeah.
And residential mortgages and tier ones and who are looking to delever their books, there's gonna be a bridge there that private capital is gonna play. And we just talking to different colleagues and friends of ours, they kind of see the same writing on the wall. It's really now positioning yourself with the infrastructure, with the fund, where you could capture that value and the upside. And so
Hmm.
far, I could say we've been positioning ourselves in Toronto quite well, to the point where now we're opening ourselves to go to Alberta and eventually Vancouver. But
Hmm.
I really think this is going to be something that we're only at the beginning. I could tell you that most fund the last 3 years are kind of like repositioning themselves because the market kind of shifted. We are quite fortunate because we took that thesis from the beginning where the market
Hmm.
was kind of the bottom. And I think we saw that bottom now. I think now we're entering where with the low interest rate environment, the market's kind of correcting itself. The value of private capital is going to play a tremendous role for the long term. So us at AppGear, that's really our thesis is really service that segment in the B2B space. We usually work with brokers who send us great deals. We value those relationships. We want to make sure we cater to that relationship. And
Hmm.
the event that we had is really it was a supporting event where I want to say thank you to everybody that kind of believe into AppGear, and it was quite a success. And you said what was the value prop for that event? We had a great speaker, Adrian Pera, who's a senior portfolio manager from RBC Capital, RBC Securities, kind of
Hmm.
gave kind of a great presentation about the market, basically. Where's the market going? Where's the post-COVID market and the current market? And I think it was quite insightful for us as a fund just to see how the market is behaving and how our fund is behaving. There's a completely disconnect, but at the same time, that's how we build our portfolio. It's to
Yeah.
be basically to be able to navigate the current the exposures right now. So we're
Hmm.
really excited. We want people to know about us. Obviously, we want to be a great steward of capital in general, but most importantly, we want to be a solution in the market that kind of be able to kind of capture the upside for the long term. And we're taking a long term
Hmm.
capital preservation outlook. So we're here for long term.
Yeah. What would you say are some of the learnings that you've picked up in maybe the last quarter or two? Maybe just kind of something new that you learned this year.
I would say the last quarter, a lot of funds, a lot of families, or a lot of investors took a lot of risk
Yeah.
over the last 4 years
Hmm.
for good reason or bad reason, but they just took a lot of risk. And we've been learning. I mean, us here, we've been
Hmm.
learning. Like, we had a lot of inquiries about portfolio acquisition from other funds. And we've learned that for us, risk mitigation is very important, making sure that we every single deal or every single opportunity that we see, let's talk about the risk mitigations as part first before we
Yeah.
talk the ROIs. And I would say that's the biggest learning curve is really how many investors took really 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 bold risk, and now they kind of got caught between the market and the interest rate, and now they're feeling the pain of that and they're trying to get out or delever.
Hmm.
And I feel that's only the beginning. and we are fortunate because we're seeing that,
Mhm.
that at that early stage, and we're basically implementing a lot of new risk mitigation in-house just because of those realities.
Yeah, I mean, I think it was Charlie Munger that said, "Just think about your nightmare." I mean, I can't think of it word for word, but he pretty much says, "Hey, you know what? Think about like where you don't want to be, and where you don't want to be is completely, in the hole with a lot of downside. So just work. He kind of likes to work backwards, which
Yeah,
I think fundamentally kind of makes sense, right? Because like that you definitely don't want to take a huge loss. So like if you work backwards and you start from there, you're like, hey, the first thing is risk mitigation. The next thing is, maybe figuring out where
yeah,
the alpha is, where the opportunities are. So that's definitely on my reading list. I think it's Poor Charlie's Almanac, which is kind of like it's a culmination of like Charlie Munger's, simple sayings and
yeah,
lessons.
yeah.
So
Send me the title. I'll definitely take a look and start reading
yeah,
it. I love Charlie.
absolutely. Yeah.
Obviously, great thinker and great investor in general.
Yeah, no, really appreciate it. Well, this was, really great, Mackendy. I appreciate you sharing all the insights and kind of sharing what you guys are doing. And I think it's really helpful for the audience to understand kind of a little more about the Canadian ecosystem. So appreciate your time. Learned a lot, and then one of us will probably be in each other's hoods in the next couple of months or something. I'll probably be up there.
Yeah,
When you come out to New York, we'll get some people together.
absolutely. Again, it's in the roadmap. Might be going to New York, and looking forward to have coffee with you in person. And again, thank you for inviting us. We're always, and I told you, we have, every time you come to Canada, you have access to our facility. It's
Yeah.
something that it's already there. Anytime you need anything from us, please don't hesitate.
Absolutely. Thank you so much. And please tell the team that we personally thank them and excited about all the great work that you guys are doing.
Fantastic. Thank you for
All right.
inviting us, and then continue the good work. Have a good
Sure.
day.
Thank you. Appreciate it. Have a good one. Take care.